Have you heard about making tax digital, or MTD, and wondered, what's the point of all this? You are definitely not alone. It's one of the most common questions I get from landlords, sole traders, and small business owners. So today, let's break down exactly what MTD is trying to achieve. Making tax digital is HMRC's long-term plan to modernise the UK tax system. It's all about moving away from that single, once-a-year report and shifting towards digital, real-time record-keeping. Under MTD for income tax, instead of filing one self-assessment tax return each year, qualifying businesses will need to keep digital records, submit quarterly updates, and then complete a final end-of-year declaration. So what's the point? Well, from HMRC's perspective, there are three main goals. First, reducing errors. HMRC has found that a huge part of this tax gap, the difference between tax owed and tax actually collected, comes from simple mistakes, not deliberate evasion. Manual records, spreadsheets, and that last-minute rush to do your tax return often lead to errors. MTD is designed to cut down on that by making digital records and regular reporting mandatory. Second, it's about improving accuracy and giving you more visibility. Under the current system, a lot of people have no idea what their tax bill will be until months after the tax year has ended. Quarterly updates are meant to give you a much clearer picture of your profits throughout the year, so there are no big surprises waiting for you. Third, it's about modernising the whole tax system. The UK's tax process was largely built around annual paper returns, which feels pretty outdated now. MTD is part of a bigger shift towards digital compliance, just like how VAT reporting has already moved online. Now, whether this actually benefits small businesses is another conversation. If you're already using accounting software, the change might not feel that dramatic. But if you rely on spreadsheets or paper records, this will feel like a pretty significant adjustment. It's really important to understand that MTD does not mean you'll be paying your tax quarterly, at least not under the current rules. It means you'll be reporting quarterly. Your payment deadlines will stay the same, aligned with the self-assessment system, unless new reforms are introduced down the line. Another common misconception is that MTD only applies to larger businesses. That's not true. From April 2026, MTD for income tax will apply to individuals with self-employed and property income over £50,000. That threshold then drops to £30,000 from April 2027. So for many landlords and sole traders, this isn't optional in the long term. So what's the practical takeaway here? The whole point of MTD is to encourage digital record keeping, reduce reporting errors, and increase how often you report. Whether you see this as a step forward or just more admin really depends on your current setup. But one thing is clear, HMRC is pushing towards digital compliance across the board. If you're not sure if MTD will apply to you or how to get ready for it, it's much better to look into it now rather than waiting until the deadline is right around the corner. If you'd like some help understanding how MTD affects your specific circumstances, feel free to email us. And if you found this explanation helpful, subscribe for more clear UK tax guidance without the confusing jargon. Thanks for watching.